Welcome to another edition of Zacks Rank Buy. I am Brian Bullen, and I am the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. So let's get right to it. The first one is going to be CrowdStrike. You've heard it. You love it. You've heard the name. It's one of these big dollar stocks. And I don't want you to be too afraid of these stocks that have these very big dollar signs. Again, this is a percentage gain. All right, so it's CrowdStrike. That's the name. It's CRWD. That's the ticker. It's a Zacks rank number one. That makes it a strong buy. And it has that growth divergence that I love to see, an A for growth and an F for value. I love to say that growth investors and value investors are inherently looking for different things. So when I see the growth score and the style score completely different, I know I am on the right path. All right, so let's take just this quick look at this chart. Look at this 45-degree angle. It's up, and away. CrowdStrike obviously is that internet software name, does all that internet research and gives us feedback on what's going on. It's a big cap at $77 billion. All right, let's jump to the numbers that we always look at when we're looking at a stock because we care about what it has done, but more importantly, what it will do. All right, so it has beaten the number here. We got a 9%, a 14%, 32%, and a 10%. All beats, 4 beats out of the last 4 attempts here for CrowdStrike. What have the estimates done for you? Well, it's a big name, so it's going to have coverage. And 90 days ago or thereabouts, we had earnings, and then they popped the numbers up by a nickel. Since then, it's held still because the Zacks rank only cares about the last 60 days. But we can see that next quarter, which would be the first quarter of, I guess it's a fiscal year, so it'll be the second quarter of 2024. It's moved up a penny, 79 cents to 80 cents, although the full year is held still at 295. Next year, going from 364 to 365, that's up a penny. Not a whole lot of movement there, but that tells us that a lot of stocks are seeing some difficulty here. Otherwise, this wouldn't be a 1. All right, 36% top-line growth for this year, 28%. That's a big grower. Big grower justifies big multiples for the most time. But as we can see with this stock, this is a very big multiple. We're looking at 88 times forward earnings. That's a lot, even given the 35% year-over-year growth the company posted in the most recent quarter. Price to book awfully big at 37 times. Those value investors are going to hate that. This is an asset slim business, though, so that means, the very few assets. So as the valuation rises, that number is going to continue to get out of whack there. Price to sales is 27 times, which means the market really values their sales and their sales growth. Margins, operating margins here, we see a negative 2.4. We flipped to positive. So this stock could be racing here with this next report if we see that trend continue. Because I do believe their gross margin's pretty high. All right, let's take a quick look at the stock here, and we'll go through the whole thing. I think this is a pandemic. We're going to die, but not this stock. This stock is up and away. Tech recession of 2022, and ever since that last year, we have just started going parabolic. We're rising, but here's the thing. I'm going to clear out my scribbles that I'm going to want you to focus in on. Your earnings estimate lines just continuously trending higher. When you have that, we're seeing estimates continually move up. Okay, so that's number one, great to see. Number two, the distance between these two lines here, that just tells you there's good earnings growth and more to come from CrowdStrike. That's CRWD. I know it's a big dollar stock, but I want you to think of this as a percentage gain. That stock could easily move a lot higher from here. All right, let's go to our next one, and it's a very hot, very new chip maker. It's ARM Holdings, ARM. It's a PLC, which means it is I think that means it's a London-based company, so it's an ADR. ARM is the ticker. The Zacks rank number 1, a B for growth, an F for value, so good growth divergence still. And I'm going to draw your attention right now to this particular spot on the chart. Company reports earnings. The stock was $70-some. It has traveled up to 150. That is a quick period of time to see it double. But There's a good reason for that, and we can see here that just from this screen right here, it just reported. Okay, so we got 45% year over year, 3 to 5 year growth estimate. That number is going to move a lot higher. Already, this company just reported. Already, we're seeing the earnings ESP up 6% for next quarter. We're a mega cap here at $150 billion. So this thing is really, it's a big name, big move. It's the spinoff from SoftBank. They make chips, and they talked about how their AI segment's done so well lately. So we've got 2 reports total, 38% beat on the very first one, which is weird to see. Normally, they like to pack in some losses in that first quarter when they report. We just saw this quarter here as a beat, but the real key was the guidance, and then the guidance, what it did to estimates, as we can see here. It was 20 cents. It kicked up, and then we just had that beat just a little bit ago, and we're at 20 cents, 28 cents. So from 21 to 28 cents in the last 7 days. This number goes from 25 to 28. This number for the year, fiscal year, goes from $1.06 to $1.16. Next year, we're starting to chug 137 to 149. That's as good of a big arrow as I could draw. I'm not paid here for my drawing capabilities. All right, let's talk about our growth. And again, my key idea, what I love to see in a growth stock. We got 16.5% top line growth this year. Next year, accelerating. That's what I love to see, accelerating growth. So 16 to 24%. So we're going to grow even faster, even better, even bigger, even stronger. Well, when you're growing like that, people are going to say, geez, I want this stock. I want this stock. And they're bidding it up. They've bid it up 100% or so in the last little bit here, 70 to 150, right? So we're looking at 128 times PE. That is a lot. 30 times book. And I know they only showed a little bit of growth there, but things are going to get a lot better. We don't have any margin numbers. That's too bad. Margins are moving up on this stock. I guarantee you that. All right. We're going to jump to our chart, and our chart shows that this company, was spun out back end of whatever month that was. Looks like August from SoftBank. It trickled in, and it has gone, and then absolutely straight up to the sky. The question is, do you think it continues? And the answer is yes, as we look at these big spaces on this chart between the estimates. So that is great to see. So let's keep your eye on ARM. All right, that's it for this week. Be sure to join me next time, and I look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to look at all of our latest promotions.